So this belief that markets are efficient is completely wrong. When you manipulate the most important statistic in finance, the stocks disconnect from fundamentals. And I think what you're seeing is that stocks are more disconnected, which gives you a tremendous amount of opportunities if you're thinking.
Hi, everyone. This is Timothy Nihill, founder and CEO of Twin Shores Financial. Welcome to our Financial Freedom Podcast. This recording and this first podcast, we're bringing on a really good friend of mine. His name is Chris Galizio. I think he's got a great point of view. He shares a lot of great information, being an economist and a former fund manager and hedge fund manager. For any of you watching us on YouTube, please note that you can also listen to the audio and share the audio with your friends on podcast platforms such as Spotify and Apple Music. Thank you very much for sharing your time. Please like, subscribe, and share any comments. This one's off to Chris.
So great to see you guys again. I've known Tim for a long time. I've done a bunch of podcasts with these guys. They all have great questions. So I'm a former Fidelity large cap growth fund manager. I then shifted to start managing a hedge fund for a little while, and started to notice right around 2019 that nothing seems to make sense anymore, and everything's being run by the Fed policy. And so stocks no longer reflect fundamentals. Because when you control the most important statistic in finance, the 10-year bond yield, stocks disconnect from fundamentals. People still believe markets are efficient. I think stocks are completely disconnected. So what I did was I wrote a white paper during my hedge fund called the $340 trillion problem, which is referring to the dollar system and the dollar system itself.
Can people access that?
You can access it on my website, which is focused-capital.com, and it's under white papers. It's in the white paper section there. But what I realized is that nobody reads white papers because it's boring academic stuff. So what I decided to do is make a movie called Money Game to show it. It's going to be a movie and we're very close to being done. I think we think right now it'll be done. It'll be ready by November of 2023. So it's kind of an exciting time for us. The movie is essentially kind of like a Good Will Hunting meets The Wolf of Wall Street. It's action. Your heart is going to bleed for this guy who's what we're trying to do is we're trying to show the difference between the financial economy and the real economy. And we have two characters which represent each of those. But we try to do it in a very entertaining way. I have a director that wanted to make this incredibly entertaining. So our first goal as producers of movies, entertainment, right? It's a movie at the end of the day, but there's definitely a message in here, a bigger message that the Fed has broken capitalism by intervening in bond markets.
Would you say the intervention in the bond markets also broke the bond market as well?
I mean, there's no price discovery in any markets, right? So when the Fed, it's the biggest quote in our movie, when the Fed intervened in bond markets, it broke the ecosystem of capitalism. Money shifted from active managers to passive managers, not because passive managers are smarter. We all know that passive doesn't think. It's because
there's no one behind the screen.
Because there's the passive and the quants won because they're machines and they have no morals. It's moral hazard. So if you're giving your money to a machine, understand they could care less. They don't know who you are. All they are is numbers, right? And so to me, our closing quote of the movie is from Jack Bogle, who's the founder of passive. If passive ever gets bigger than active, you'll have chaos and catastrophe, or markets will fail. What you're seeing right now is that markets are failing in the sense that they no longer reward profit. They reward companies that need financing. And so the ecosystem changed from a system that rewarded profit, capitalism, to a system that rewards companies that need financing. This is a financing system now. Notice that during COVID, when unemployment hit 33%, stocks went up. Why? Because the whole thing is a policy tool of the Fed now, right? So what was happening is they were printing money like crazy. Money supply went from 4 trillion to 9 trillion over 18 months. Right. So what they're doing is they're manipulating interest rates. I mean, they're telling you. In 2015, Richard Fisher said they've been intervening in the bond market. And if this ever ends, it's a ticking time. If interest rates ever go up, it's a ticking time bomb. And here we are at that point where it's a ticking. We're basically, if you notice all the crises, they keep getting bigger. It started in 1998 to 2001. We had the tech crisis. In 2007, 2008, we had the financial crisis, which was much bigger. It wasn't just a sector anymore. And here we are in 2023, sitting in a sovereign debt crisis, which if the government assumes all the risk, it's now the currency risk. And we're seeing that from tax revenues. Tax revenues, we just had tax day. The government coffers went from $100 billion to $253 billion on tax day, right? $253 billion, understand that's less than Apple, right? So the US government now, after tax day, has less money than Apple, right? So, right. Isn't that, I mean, you laugh and it's crazy. So which comes the second biggest line in my entire movie. By the way, this movie has predicted this whole thing. The second biggest line in our movie, print the money or trigger the revolution, right? So the professor's going to raise the book, The Efficient Market Thesis. And he's going to laugh and he's going to say, smart people thought the world was flat once too. Then he's going to say the most underused books in finance are history books. He's going to talk about the Great German Inflation from 1921 to 1924. Von Habenstein, the head of the central bank in Germany, had a choice: print the money or trigger the revolution. You're in a fiat currency, right? So in a fiat currency, if things start getting really bad, like 3 weeks ago at Silicon Valley Bank, if the government didn't print the money at that point, we would have had a massive run on the banks. We're already having a run on the banks, right? So if
they're just trying to stretch it out as long as they possibly can.
Correct. And we started making this movie maybe 2 years ago. We started writing it and understand we know this is going to end. So people ask me, Chris, why did you make Money Game? And my answer is because I know how the movie ends. My coffee goes from $3 to $30. Everyone turns and blames the capitalists and turns to an authoritarian leader like Hitler to save them. What we're trying to do is we're trying to have them blame the central planners, Janet Yellen, Jerome Powell, the Fed, and return to capitalism. Because what you're seeing here is not capitalism. This is a centrally planned economy. Ayn Rand, the author of Fountainhead and what's the other one?
Atlas Shrugged.
Shrugged, of course. She says that capitalism with government help is the worst form of economic is the worst type of economic phenomenon. Of course, because it's not capitalism anymore. It's governments picking winners and losers.
And Janet said that a few weeks ago, right? She said in Congress, they're like, so which banks are you going to bail out? We'll figure it out and choose them.
Well, and what they're doing is and one of the congressmen said to her, so my bank in Oklahoma isn't protected. Right. And she said yes. She pretty much said yes. In other words, you need to get your money out of those regional banks and put it into the bigger banks because the bigger banks are too big to fail. So they're picking winners and losers, and they're showing you that, right? It's not a capitalist society anymore because the system shifted from being a capitalism, which, by the way, was the biggest strength of the U.S. and the G7. But now it's financing, and now it's our biggest weakness. And Russia sees it, and China sees it, right? And so there we are. And that's why I decided to make the movie, to show that things don't make sense anymore. It's that's just where we are. So there's a quote from Joseph Goebbels. You can tell a lie and if you tell a lie, a big lie, and keep telling it, eventually people are going to believe it until the government can no longer protect the people from the economic, political, and military consequences of the lie. And here we are. We're at the point that they're having a hard time protecting us. I mean, you're seeing with the amount of after April 17th, you're seeing the U.S. has $253 billion. At some point, they're going to have to print money. We're coming up against the debt ceiling, which is another issue, right? They're going to have to raise the debt ceiling. I mean, there's no way out for them except to increase the money supply tremendously. And if you increase this money supply, you're going to cause inflation. There's a quote out there. There's an economist I follow, Luke Roman, who says the strongest the dollar will ever be is the day before the government defaults. Because if they don't understand that bonds are risk-free, the only reason they're risk-free is they have a printing press. If they choose not to use that printing press, they can default, just like anyone else, right? So that's what makes it risk-free.
No, and then I guess for everyone, Chris, it's like, so what happens if the U.S. does default? Because it has happened before, right?
So the U.S. will never default because there's no reason for them to default. So the bull case for bonds is that the government prints into the inflation. Because if they don't print, they can default. If they default, the dollar goes to zero. So the bull case is that they actually have to print. So think about that. So if inflation's 7 or 8% right now, and they have to print, then inflation will actually go up. And that's the bull case. Right. So there's no, so understand we've had a 40-year bull market in bonds, right? At some point it had to reverse. Interest rates went from, And here's the other thing that makes no sense. As debt has gone up, interest rates have gone down, right? So in 1980, interest rates were 18%, and debt to GDP was 30%. Now interest rates are zero and negative in real terms, because we're all financial professionals. We understand that interest rates are only 3.5% and inflation 7%. So you've got a 3.5%. If you leave your money in bonds, you're losing 3.5% a year. Right.
People don't
So
they think they're getting 3%.
Correct. Debt went up to 125% of GDP. Interest rates went down. That makes no sense. That is, by the way, the money game. That's what I refer to in the movie as the money game, right? It's controlling interest rates, which I'm trying to explain it in real terms to call it the money game, but what it really is the wealth effect, right? Because it's the value of $1 paid annually. $1 paid annual. If interest rates, what's the value of that? If interest rates are 10%, it's 1 divided by 10% is $10. If interest rates fall to 1%, it's $100, and if interest rates go negative, it's infinite. So at some point in the movie, the professor says, what happens if interest rates go negative? The professor says, my coffee's worth infinite. My desk's worth infinite. My chalkboard's worth infinite. Does that make sense? And of course, it doesn't make sense, right? Because they're playing the money game. They're manipulating markets. And there's no price discovery in markets. So we can be protected as long as the government can protect you from political, economic, and military consequences of the lie.
Isn't he just pretty much saying that physical assets or physical products or whatever would hold their value or are infinite in a sense, right?
Well, so think about that. So if the government prints money endlessly and the currency collapses, then the value of my coffee really does go to infinite, right? The value of my water is infinite. Why? Because the dollar falls, right? So it's interesting. There's a quote from Phil Knight from Nike, and he says, everyone was looking for the next Michael Jordan on the basketball court, and he was walking up the fairway. But think about it. Everyone's waiting for the stock market to collapse because they're saying valuations are too high, and they haven't considered maybe it's the currency that collapses. And by the way, during a currency collapse, all assets go to infinite in the currency terms, right? If you look at Venezuela recently, as the currency fell, the last thing you wanted to own was bonds or cash. And what I say is that running to cash and bonds during a sovereign debt crisis is like running into a fire doused in kerosene.
It's interesting because that's what the news wires are telling people. The bond market's in a bull run, bond market's strong, and it's going to outperform the stock market. And part of it comes from this belief system that, and this has kind of been sitting and going through my mind the past week and a half. It's like, what if the U.S. can't bail itself out anymore? And what if we're not as strong as we think we are?
Well, right. I would argue that what we have is, the Fed no longer has a dial. They have a switch, right? They can either, if they print money, everything continues on. But if they decide not to print money, then what you're going to see is the interest rates go up, housing market gets hammered, stocks get hammered, everything gets pulled back. The bond market doesn't make sense in terms of the government has more risk than they've ever had. They have more risk, first of all, because they have more debt, but also you're seeing tax receipts aren't coming in. A microcosm of the U.S. is California. The top 0.5% of wage earners generate 40% of California's income taxes, right? In the U.S., the top 1% generate 40% of tax receipts. Understand that most of those tax receipts from those top 1% people aren't from hourly work. It's from asset prices. So if asset prices decline, then tax receipts decline. We already have a budget. If you take big three entitlements and military, we're at about 120% of tax receipts. If tax receipts decline, it's going to go to 130 or 140%. The U.S. is already insolvent. We already run a huge budget deficit, right? If the stock market falls, the budget deficit's only going to go higher because tax receipts are going to fall.
We're broke.
We are broke. We are completely broken. And honestly, we've never been more broke. And you see it from that tax receipts. The tax receipts didn't come in. Why? Because the stock market and the bond market in 2023 was the worst performance since 1871.
Oh yeah, last year.
Stock market, right? The stock market was down 21%. The bond market was down 23% at the exact same time. Which, by the way, when the stock market and the bond market go down the exact same time, that's usually a sovereign debt crisis. That from my days in emerging markets, when I covered emerging markets, when I saw both go down at the exact same time, it's a sovereign debt crisis, right? And so that's what you're sitting at, right?
So it's kind of interesting, right? Because you have a lot of people out there. I mean, right now I've been in Florida for the past week and a half because I needed some sun. You know how it is up in New England.
Absolutely.
The winter fatigue hit me this year, and I'm like, I've never felt it before, but this year I'm like, I got to get out. It's amazing because there's still this old belief system that things are the same. We'll be able to figure it out, and that bonds and cash are safe havens. And I mean, you look at money markets and brokerage accounts went up $5 trillion the past 30 days.
You know, it's funny. Look at what Warren Buffett's saying. So I saw an interview with Warren Buffett recently. He's talking about buying the top 5 Japanese trading companies, and he's saying why? Right, exactly. And when you listen to him talk, he says, "Well, the bond rates in Japan are 0.5%, and I can go get a 14% free cash flow yield on trading companies, right? So why would I put my money in earning 0.5? Which we all know that it's really not 0.5 because inflation's higher than that, so it's negative. Why would I put my money in a negative yielding asset? Here's the real problem. The rest of the world is seeing that too. The rest of the world, I think the day that the day the U.S. stole Russians' reserves, and they basically told the world that your reserves in cash aren't really yours. If we want to take them, we can. And they did. I think that was the equivalent of 1933 when FDR disallowed the private ownership of gold. It was the same as 1945, which is Bretton Woods, when the U.S. became the global reserve currency. It was the same as 1921 when Nixon closed the gold window. It was a currency shift, right? The rest of the world, India, Brazil, looked around. They said, "Wait a second, they can steal my reserves if we have a dispute with them."
Yeah, that's exactly it.
Which then all of a sudden, all of them are trying to get off the dollar. If they get off the dollar, we're going to have the biggest currency shift in history. Which I keep saying on my podcast that Money Game will timestamp the biggest currency shift in history, because it's happening. You're seeing the BRICS and China get off of the dollar. If they what's made what has allowed the G7 companies to trade at valuations that they're trading at is because of they're all the global reserve currency. If you can keep currency strong, you keep commodities weak. I think the best macroeconomic chart right now is the chart of financial assets versus real assets. And it shows that there's massive cycles. But right now, we're at a 120-year low in real assets versus financial assets. If you look around, the symbol for danger in China is danger and opportunity, right? Because the danger is on one side of the ledger, you're financing companies like Tesla and Amazon and all that. On the other side of the ledger, you can buy real assets at 1, 2, 3 times free cash flow. I own a coal company called Whitehaven Coal. It's an Australian company that'll have all their money back probably in about a quarter. Trades at about 0.3 times trailing free cash flow because nobody's investing in coal. Why? Because the whole thing is being centrally planned. It's all computers, right? 85% of the market right now is passive and quant. There's nobody thinking. Right? What I'm trying to do with Money Game is I'm using my lead character James and Amy in the story to represent the real economy. And what we're going to be talking to is we're going to be talking directly to James. You think we're talking directly to James? We're really talking to a much broader audience, which are podcast. Right at the end of this, at the end of the movie, actually I shouldn't tell you, but at the end of the movie, Governor Gardner, which is our professor, transitions from being a community college professor to a much bigger role, basically telling the world that the whole system is broken.
Right. But I mean, it's kind of funny. So at the end of the movie, and when people go to watch your movie, Chris, what's the story you want them to get out of it?
So what we're trying to do is we're trying to get people to think again, right? Don't just take your money and pour it into in passive investment or to ETFs. Pick individual stocks. Pick stocks. Like just think. If you think it becomes very obvious what stocks to buy. Like I was talking about Whitehaven Coal, 0.3 times trailing free cash flow. That's pretty good. How about with Petrobras trading at a 70% dividend yield? YPF traded as low as 0.3 times. It's an oil company in Argentina. It's the biggest oil company in Argentina, and it traded as low as 0.3 times earnings. The company was trading at $1.1 billion, and for the quarter, they earned $800 million. So if you just think and you actually stop just pouring your money into S&P 500 or just blindly into investments, because what's happened is Fed drove interest rates down, everything went up. It didn't matter what you owned. You could buy GameStop. You can buy, which we all know is bankrupt. Then nobody buys their games there anymore, right? You can buy Tesla because the ecosystem was shifting, right? So what I'm trying to make the point is that we're not living in a capitalist society. They've been controlling interest rates. The biggest point in the movie is that the ecosystem changed. It shifted from thinkers, millions of independent thinkers called capitalists, to central planning where everything goes up because interest rates are going down. And so the theme of the movie is capitalism requires risk to allocate scarce resources. We're not allocating our scarce resources anymore efficiently. So now the entire system is misallocating resources, which then slows the real economy. And that's the biggest point in the movie.
And I think entrepreneurs and business owners and small business owners in this country, they see it.
100%.
It's so clear. Like, especially, I can say this now as a business owner myself. It's like, it's so clear how broken the system is and how it's not an entrepreneurial place. This is not a place where you come from overseas and earn a living and build a family and all that jazz anymore. That whole American dream is done. It's much, much different than that.
Opening quote here is, as the Fed played the money game, resources flowed to the financial economy at the expense of the real economy. So at the end of the movie, we have two different economies. The professor is going to say our system's broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economies to misallocate resources. Now we have two different economies, the financial economy and the real economy, that no longer work together. Money printing doesn't create wealth. Wealth is created by all of your hard work. And that's the point. What's happening is money's flowing to the financial economy at any expense. No one's even looking at it. I mean, the valuations don't even matter anymore. I actually believe that because the ecosystem changed, the system shifted to a financing system. If you think about it, if I'm in a passive world, and right now probably 63% of the market is passive. In a passive world, who makes the adjustment for dilution? There's no analyst. So nobody makes the adjustment for dilution. So if
and that's what people don't understand with their 401ks. They have no idea this is happening. They think, I put my money in my 401k. Well, guess what? Your retirement is the one financing the system.
100%. If nobody makes the adjustment for dilution, then if you dilute shareholders every quarter, your market cap actually goes up. You become bigger in the index, right? Because you have more shares. So you become bigger in the index. There's no adjustment. Then what happens is trend following quant buys it and pushes up further. So this is why it's not because Tesla's doing well. I saw Tesla's earnings the other day. They just came out last night. They were down 20%. Wait a second. I thought Tesla was going to grow into its earnings. It's declining by 20%. Okay, so why is it trading at 100 times earnings or 100 times? Don't look at earnings. Look at free cash flow, right? Because we all know that you need cash to pay your businesses. No one. If you think about all the sell side, what they're trying to do is they're trying to get you to look at earnings because they know they can manipulate earnings. Can't manipulate cash. So look at the free cash flow of Tesla. So this is the point: is that none of these stocks make sense, but it's because the system shifted to machines that don't have morals. They don't care. At the end of the day, if you're a financial advisor and you're a human, you're looking saying, I don't want to risk my client's money on a company trading 100 times earnings. I won't get my money back. As a matter of fact, here's how we say that in the movie. We get the college student, the community college student understands it, but financial professionals don't. And he says, the professor says, who here is willing to give me $152? Think about it, $1 divided by 0.66, because interest rates hit, even in nominal terms, U.S. interest rates hit 0.66 as we envision this movie. So $1 divided by 0.66 is $152. And the professor says, who here is willing to give me $152 today if I give you if I give you $1 forever? And the dumb student in the class says, we'd all be dead by then. To which the professor says, correct. But financial professionals are still having you invest in that, even though by the time you get your money back, you'll be dead, because that's the point. It's a financing system, not an investing system.
Yeah, that's incredible.
Isn't that incredible? So that's the irony we're showing, is that a student in day one. So I looked at the last I looked at Disney. Disney traded 4,200 times free cash flow. Okay, so you're going to get your money back in about 6,400. You'll be dead by then, just so you know. Right? But people still believe they're investing in Disney. No, you're not. You're financing it.
Right. You're keeping them afloat.
That's it. You're providing the financing. But by the way, this all ends when the dollar loses global reserve status and when printing money no longer creates wealth. What was happening up till now is because the dollar is the global reserve currency, they could print money. Money supply, understand that money supply of all of the entire US in 2007 was $800 billion. Now it's close to 9 trillion. So in about 20 years, not even 20 years, we've gone from 800 billion. Think about it. It took you 200 years to get to 800 billion, because the US has been around for 200 years, right? And then all of a sudden, for the last 15 years, we went from 800 billion to 9 trillion. And why hasn't the currency collapsed? Because of the global reserve currency, until we aren't. Until the government can protect you from the political, economic, and military consequences of the lie. And that's the war you're seeing in the Ukraine. Because the world is basically saying, we're not going to give you our oil for printed dollars anymore. We no longer accept that deal. And we saw it with Russia invading Ukraine, and now you're seeing it with Saudi Arabia and Russia cutting oil supply, saying we're not going to offer that we're not going to give you that oil anymore. Thank you. And by the way, that's if you were around long enough and you were alive long enough in the 70s, remember those lines that we had for oil. We all know if we were paying a high enough price, we would get the oil, right? But what they were doing is Saudi Arabia was cutting off the oil, so we didn't have enough oil, so we had to partition it, or not. Not everyone could have enough oil, right? So there wasn't enough supply, and we're seeing the thing happening again because the real asset producers understand the biggest export the U.S. has had over the last 40 years. Since we've been under this dollar system, since we've been under the petrodollar system. So the biggest export in the U.S. over the last 40 years has been dollars. Our balance of payments equals your current account minus your capital account. Which is simple math, right? So Professor Gardner says finance is the simplest subject you will ever learn. And it is. If you think about it, it's your current account minus your capital account. So over the last 40 years, we've run current account, which, by the way, is mostly your trade account, has been negative. So how have we had our negative current account for 40 years? Because it's always been balanced by the capital account, right? So money flowed into the U.S. In 2007. What is that money flowing into? It's money's flowing into bonds and stocks, and whatever, right? So it's financial inflows. So that capital account has gone from about 4 trillion in 2007, which was about, I don't know, it's actually less than that. It was like 2 trillion, I think it was, like 10% of US GDP. Now it's about 80% of US GDP. So now the question I have is, what happens if all of that money starts to flow out? Right here in the biggest, so let me just give you the biggest buyers. The biggest buyers of that capital account, going from 2 trillion to 18 trillion, were Japan, the UK, China, and U.S. banks. So we know that Japan is having its own currency crisis. They're selling U.S. dollars. Yeah. UK had the pension crisis. They're selling U.S. dollars. China's your adversary. Do you want to trust them? And now all of a sudden you have the banks losing deposits. So you've just lost your 4 biggest buyers of U.S. assets, right? And think about if all that money flowed out at the exact same time. You can't balance your current account and your capital account, because this cumulative is 18 trillion. If there's no way to balance it with a positive current account quickly, so what has to happen? The currency has to fall. If money flows out of
they turn the printer on,
they're going to have to print the money or trigger the revolution.
Yeah. Well, and
right.
And Citibank is working with the EU right now. This was on Bloomberg on the ticker this morning. that investment banks are about to move hundreds of billions of dollars out of the U.S. to the EU.
To the EU. See, I think the EU and Japan are part of the dollar system, right? I think the G7 is the dollar system. When people look at DXY, I think it's silly because it's being manipulated. Notice that Janet Yellen had a meeting with the IMF in October, and notice that DXY all of a sudden fell from 115 to 101. Why? Because they manipulated, right? There was a just like the Plaza Accord in 1985 was a coordinated devaluation of the U.S. dollar. There's no coincidence that they met October 7th to 14th, and all of a sudden the currency went from 115 to 101. It was just a coordinated devaluation. And again, if you can keep currencies strong, you keep commodities weak. The biggest commodity in the world, labor. So this is not a system that works for the people. It works for the top 1%. And we all know that capitalism benefits everyone. But this system we're seeing is only benefiting the rich. Money's flowing to the rich at the expense of the poor, right? The top one, there's never been more inequality in the U.S. than there is today. U.S. is great. The U.S. economy is doing great, but it's not flowing to the average person. All it's doing for us is causing inflation. It's just flowing to the top 1%. It's flowing to Elon Musk and Jeff Bezos, and the people with the money make more money. And I agree with you, Alex. They're going to have to print the money, and you're going to be shocked. You're going to see the money supply go from 8 trillion or 9 trillion today back to 20 trillion. And when money supply is 20 trillion, you're going to see real assets rip higher. And the irony is that real assets have never been cheaper.
So basically, Chris, on the real asset side, then, okay, we're going to go, let's say 9 trillion to 20 trillion, which, oh, by the way, if you look at the latest budget estimate, they're like, hey, we're going to have a deficit of $51 trillion. Right. So the whole people believing in the Washington, D.C. game is laughable, right? It's absolutely incredible. But so now you're sitting there, if you're the everyday person, you're like, you might be in a lot of trouble.
I mean, again, I would go back to that Chinese symbol of danger. It's danger and opportunity. So yes, it's danger. If you want to have 90% of okay, so here's how I would look at it. 95% of the U.S. Economy benefits from a strong dollar with no inflation. But now we're having the biggest paradigm shift in history to weak dollar inflation, right? So now you should be looking at real assets. So if you have strong dollar without no inflation, you can drive interest rates to negative and stocks to infinite, right? But once you shift to the other paradigm, which is weak dollar inflation, now it's only 5 to 8. It's only going to be exporters and energy, basic materials, and industrials that will benefit from that system.
And it's interesting, consumer. Now we're talking about a return of industry in the United States, which we haven't seen in quite a long time.
Which is exactly what we show at the end of Money Game. You will see a booming economy. Because to understand, people think that there's going to be at the end of Money Game, the dollar will fall and the system will collapse. Not at all. What you're going to see is the system is currently broken. As a matter of fact, productivity in May of 2021 hit a 75-year low because we're misallocating resources. We're pouring all our money into GameStop and Tesla and Amazon and all these money-losing companies, right? And it's getting sucked out of the real economy. So if the system collapses, money will flow back to the real economy. It's a return to capitalism. A return to capitalism, you will see a booming economy. All of a sudden, at the end of Money Game, you're going to see factories returning. You're going to see semiconductor plants returning. You're going to see commodity prices booming. You're going to see a booming economy because this system is the system that doesn't work. So if the system breaks, you're going to see our economy recover. It's the exact opposite of what people think.
Right.
And that's what we're going to show at the end of Money Game.
Oh, that's awesome.
Was there a specific moment where you were like sitting at a desk somewhere at your job at the hedge fund or Fidelity where you were like, this system is completely broken and that's where this idea for Money Game like sparked? Or was it something that like happened over time?
Nope. It was, you're exactly right. It was a point. And the point for me was the repo market spike in September 2019. Because all of a sudden interest rates went from 1% to 10%. And think about the value of our $1 annuity. The value of our $1 annuity when interest rates go from 1% to 10%, go from $100 to 10, right? And what happened is, what did the Fed do? They stepped in, they nationalized the market. There's an interview between Rick Santelli from CNBC and James Grant from James Grant Interest Rate Observer. And James Grant says the U.S. nationalized the market. They bought every single repo. There was no open outcry anymore. There was no open, bidding or anything like that. It was just the U.S. nationalizing the market. So that got me to think, well, what the hell is going on? I always knew something was going on and nothing made sense. But all of a sudden, it became very clear that they were playing the money game. So they started printing money like crazy. They nationalized the market, and that was the thing that spurred me to write the $340 trillion problem in my hedge fund called Focus Capital. And I wrote that paper. I started writing it probably September. Maybe I started writing in October. I finished in February. And I published it on my website at the end of February, which, by the way, was right before COVID. And then everything went into hyperdrive after that, right? So then I'm sitting in my hedge fund thinking, oh my God, we should short these companies, right? Of course, because business is going to zero, right? Live Nation will go to zero, right? Because they have no revenues. And the Fed printed money like we've never seen in history over the next 18 months. And so as they were doing it, then I met a director. We started chatting, and I literally sat down at breakfast with him. I just started chatting randomly. I was all by myself. I had played hockey that morning. The director walked in, and he said he was working on Free Guy with Ryan Reynolds. And he said,
it's a great movie.
right. And he walked in, had breakfast. We started chatting, and he said, "Can you?"
Sorry, what's the last line of Free Guy?
I don't know. What is it?
Hey, buddy, there are no more banks.
Right. That is unbelievable. That is unbelievable. So anyway, I started talking to him. He asked me, why does Netflix trade at $500 billion when they lose $5 billion a year? And I said, I think I can explain to you that in 30 seconds. When interest rates fall, asset prices rise. When interest rates go negative, all assets are worth infinite. He's like, I don't know what the hell you're talking about. I said, take a look at my website, because I have it all written on my website. It was publishing the website at the time. And he looked at it. He came back to me. He said, this is actually amazing. Do you want to make a movie? So we ended up hiring a screenwriter who went to UCLA for a screenwriting degree, wrote an epic story, but gave us amazing characters, and we made a movie. It's amazing, actually. So yes, Alex, there was a certain moment. Amazing. It's actually amazing. I can't believe we made a movie. I mean, I'm a finance guy, so I don't know any of this. But I will tell you, the movie is incredibly entertaining. Like, I can't believe what we did. There was just so many ways to go with this, right? The villain in our movie is the CEO of the next big thing. It's like Snapchat or TikTok, making billions of dollars on his app. One of the favorite shots I remember from the movie. This is one of the scenes. So they just played basketball. James is my lead character. He falls in love with Amy. By the way, there's a love story in there, which is amazing. And our actors were epic. They were just fantastic. We have three of the actors from I Want to Dance with Somebody, which was the story of Whitney Houston, right? By the way, our film crew also shot Coda. So it's a quality film. The villain in our movie is the CEO of the next big thing. It's like Snapchat or TikTok. And we have James, our lead character. They just played basketball. They have a guy next to them who is really bad at basketball. And Bryson, the CEO of Tappet, is turning to James saying, James, got his fingers up like this. James, why do you think my company is trading at $10 billion? Why? He goes, it's me. Right? So what we're trying to do is we're trying to show the hubris of these guys, because Elon Musk and Jeff Bezos believes it's because of them. Right? But it isn't because of them. It's because interest rates went negative and their stocks are trading infinite. Just like my coffee.
And it was funny. I woke up and was hanging out this morning, and my son Ryan, who's 13, goes, Dad, Tesla stock's down 10% this morning.
Right. And by the way, massively overvalued. Right? Still, this price. I mean, how couldn't it be? Like, I mean, why isn't it down 90%? Like, I mean, obviously the stock doesn't make, and the answer is because the ecosystem changed. I don't believe the market reads the news anymore. 85% of the market is passive quant. Those are machines. They don't read the news. They're just reacting to the Fed policy, right? If I asked any of you guys, would you guys rather a company that earns 40 billion or loses 40 billion? Every human on the planet, everyone would say, I would rather a company that earns 40 billion. And my question then would be, then why does Amazon trade at 14 times the valuation of Petrobras? One makes 40 billion, one loses 40 billion. Because it's not humans anymore. It's machines.
But wouldn't you say with Amazon's AWS and data servers and all that and physical liabilities, doesn't that give them more money? I don't know what the Petro stuff cost or whatever that company you're talking about, but I know Amazon does a lot more than just deliver your products to you.
So at the end of the day, you got to value a business by its profit though, right?
True.
So if Amazon was operating in the real world and it was losing, how much would you pay for it if it was losing 40 billion in the real world?
Probably nothing.
Right. That's the answer. So you're financing it. And I agree with you. AWS is profitable, but their other business, it loses money. Right. So if you stripped away AWS and just valued ADS, yes, AWS is profitable and worth something. But if you include the entire business, they lose money. So yes, they provide a great service, but so does the post office. Would you pay $1.4 trillion for the post office?
No.
Right. They're providing a great service. Right. So they actually, in capitalism, you actually have to make a profit. Right. I think the reason Amazon and all these companies like Tesla have gone up is because they're issuing shares. They're not. I think the narratives are wrong. I think when they were all these tech companies, when they report their earnings, notice they always go up. Why? Because they're issuing shares, not because they're beating earnings, because they're issuing shares. If you issue shares in a passive world, you become bigger in the index. When you become bigger in the index, the trend following quant then buys you. Yep. It's not because I think the whole narrative is wrong. I think they're. Again, I think if you tell a lie enough that you're living in a capitalist society, that this is why it's happening, it's because they're beating earnings, but you actually look at the earnings, you're going to go, well, they beat earnings, but their revenue is down 25%. Why are they going up? Right. And it's because it's just isn't, it's a lie, is in my opinion. Right. People can think whatever they want. With that.
It's a fugazi. It's a fugazi. It's a wazuzi.
Right. I mean,
circular. It's all circular.
It's all circular. Honestly, look at Tesla. So Tesla, 3 years ago, they were about to go bankrupt. Even Elon Musk says we were right about to go bankrupt. We were 6 weeks away, and then what we did was raise money. Oh my God! Magically, they raised money. The market cap goes up, and then the stock starts running. Right. Then the stock went up so much that they were like, oh my God, the stock just went from 200 to 800. I'm going to raise more money. I might as well raise it while I can. Then all of a sudden, that recharges the stock again, right? Stock flies again. Then they come out and they do a stock split, more shares again, right? Stock rips again. I think that's what drove Tesla up, because they were issuing shares a lot over a period of time, and all of a sudden it ripped higher, and the trend following quant bought it. By the way, in the movie, we're going to have Professor Gardner talk about Money Game. You're going to step in on they're doing the Money Game podcast, and now James is teaching Gardner how to put together a podcast, and you're going to step in on them as they're talking, and Gardner's going to say the Reddit guys finally figured out how to trigger the stampede of algorithms, just aggregate a bunch of buyers. It's like, and then James is going to and then Professor Gardner's going to say it's like waving a red flag in front of a bull. That's James actually. And Gardner says, bingo. In other words, if you aggregate a bunch of buyers, all of a sudden there's all these buys, boom, 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 thousands and thousands of buys. Then the trend following quant says, oh my God, the smart money is buying GameStop. All of a sudden the stock,
it's a tsunami.
Stock goes up from $270 million to 20 billion. All you got to do is aggregate a bunch of buyers. And notice we're 2.5 years away from that. And GameStop is still trading at $8 billion. And what happens is the narrative. So rather than it being fundamentals, then narrative, then price, what we have is price movement, then narrative, then fundamentals. Because think about it, GameStop can then sell 10% of their shares at 20 billion, and all of a sudden at 20 billion, if they sell 10% of their shares, they have $2 billion of cash on their balance sheet, right? Not from selling games, but from getting financing.
Yeah, through stock.
That's what they did. So we all know that GameStop never could have gotten $2 billion from selling games. They have $2 billion on their balance sheet from selling shares.
And that's the moral hazard as a professional.
It's a financing system. It's not an investment system. And it's because the ecosystem changed, which is the biggest point in money game. When the Fed intervened in bond markets, they broke the ecosystem of capitalism. Right? So everything is operating in reverse now.
In September 2019, they bought everything.
They bought everything. And so by the way, notice the type of companies that went up the most. Is they printed the companies that needed financing went up the most. Peloton, Square, Tesla, right? It wasn't the commodity companies making profit. It was the companies that needed financing. So that's why I say it's not a dial anymore. It's just a switch, right? If they print money, all the companies that need financing go up. If they don't print money, all the companies that need financing get hammered. They're just manipulating it. So interesting.
It's interesting. It is, and it's like we do a lot of education with people we talk with, and obviously clients, to help them understand this. Like that market now, man, it's really a casino, right? It's a casino, and
that's why I say
you're hoping you're getting on a run with that. Right.
100%. And yet you can buy companies like U.S. Steel at 2 times earnings. I mean, I own a company, a shipping company, real assets, right? A shipping company called Zim. They earned $50 last year. It traded as low as 15. It traded at 0.3 times earnings. Now, by the way, they earned $50 and they paid a dividend of 30. They were paying a 200% dividend. And by the way, I got that, right? Because I own it. Right. So I can't tell you which way the price is going to go, but I can tell you that I can sit back and I can just invest. I can just sit back and collect the dividend. And over time, I'll collect that dividend and it keeps popping out. And I actually can't believe it, but, think about this too. If you pay a massive dividend like Petrobras and the stock's trading at 14, and all of a sudden you pay a $3 dividend for the quarter, the stock falls to $11 that day because it's on the X day, right? Yeah. Notice that when it falls, the trend following quant will then sell it and push it to 9. Right?
Chris, when it says forward dividend yield is 16.95 right now for Zim, and 78.62%. So that means you're getting $16 for every share in the dividend.
So hold on. So you're saying the dividend is $16?
It says Zim Integrated Shipping Services Ltd. Forward dividend and yield 16.95 right now on Yahoo Finance.
I always hate looking at forward. I want to look at past. Okay. Because forward is a prediction, right? And look what so last year they earned $50. And their dividend they paid was 30. And the stock's trading at what, 22 right now?
Yes, 20 actually.
Okay, but it traded as low as 15. So they paid you a dividend last year of $30. Right? And they earned 50.
Is the dividend paid quarterly though, or is it paid yearly?
No, it's quarterly.
Okay.
I just got a $6.40 dividend. The stock was trading at 23. I got a $6.40 dividend probably a month ago. And then the stock falls automatically to 17, right? And then it went from 17 back to 20. Interesting. Right. But people still believe markets are efficient, right? And by the way, notice now that said, if you're talking about Zim in particular, certainly the Baltic Dry Index, which is how you price shipping, has come down, right? But that was also because China was closed. Now China's reopened. So the market was predicting I would predict that as China reopens, the pricing of shipping will go up, right? So that's how I would predict it, but that's not what you're saying, right? So I don't believe the market predicts anything. I think it reacts to the Fed, and it was reacting to the Fed during COVID. As the Fed was printing money like crazy, you were having all these money losing companies go up. and not companies that were making profit. So this belief that markets are efficient is completely wrong. When you manipulate the most important statistic in finance, the stocks disconnect from fundamentals. And I think what you're seeing is that stocks are more disconnected, which gives you a tremendous amount of opportunities if you're thinking. And so we're going to try to build a thinker in James in Money Game. And that's what we're trying to do the entire world. We're trying to get James to think. And by getting James to think, we're getting the audience to think.
Yeah, makes total sense.
One more thing I'd say is imagine reintroducing a herd of a pride of lions back into the savannah. After the gazelle population had exploded by 10x, they'd make a killing. And that's what we're trying to do. We're trying to get people to think again. And if they think again, they're going to make a killing. Because you can buy stocks at you can buy real assets at incredibly cheap valuations right now. And once you understand that stocks are completely disconnected from fundamentals, you're holding a crystal ball, right? Rather than using the lens that markets are efficient, use the lens that markets are completely inefficient, have no idea what they're talking about. All of a sudden, everything becomes completely clear. Once you understand that the market is just a bunch of machines, just avoid it, right? And buy real assets, which have never been cheaper than they are today.
Yeah, and we're seeing that on the real asset side. I mean, the deals that we're coming across and you're seeing too are just absolutely incredible. And then there's like,
incredible.
I don't have enough money to go around. I have so many things I have access to.
So I literally am also doing investment banking on the side, and I have 4 coal deals that we're raising probably about $180 million, and the total profit is $4 billion. It's amazing. Like that's the profit we're looking at. We're looking at $4 billion in profit, and I can do these deals all day long because no one's investing in the real economy anymore. Everyone's just pouring their money into stocks because they always go up, because interest rates always went down until interest rates start going up and inflation starts hitting, and all of a sudden you'll have a massive switch. The U.S. is right about to lose global reserve status, and I wouldn't even say global reserve status. What I would say is the treasury bonds are no longer going to be used as reserves. The governments around the world are going to shift to gold, and you're seeing it every day.
They bought more gold last year in the last 12 months than they have in the last 50 years. And that's what everyone's like, oh, they're not going to use the dollar. It's like, no, you don't understand. They're not going to use the treasury as the reserve.
As the reserve, that's exactly right.
Yeah.
So if you were a government, why would you store your money in a bond with a negative yield? I mean, I'd ask anyone, why would you buy a bond with a negative yield from a country that's monetizing its debt? If you saw Zimbabwe printing money like crazy, you'd say, oh my God, I can get a negative 3% yield over here. I'm going to go buy that. What? Like that's what's happening, right? But people don't understand. Well, so that's what governments are doing. They're saying, I don't want to buy a negative yielding bond. I'm going to buy gold as my reserve. And that's the shift that we're going to see. And I think Money Game will timestamp the biggest currency shift in history.
What do you think of Apple raising their interest rates for their Apple Card or whatever through Goldman up to like 5% or 4.9%?
That's what Apple's getting. They're getting a 5% yield.
They're giving no. Apple will give you to move your money over to Goldman to give it to Apple or whatever to use their Apple Card. They're giving you 5% on your cash.
So what that's going to do is they're going to credit out the banks.
Yeah.
Right.
Exactly.
So the banks are offering 2.5%. And so what you're going to see money flow out of the deposits, flow out of the banks, which, by the way, if deposits flow out of the banks are one of those big 4 buyers of U.S. treasuries. So the U.S. has already lost Japan. They've lost UK. They're going to lose China. And now they're losing the banks. Who's going to fund them? Nobody. They're going to fund themselves. They're going to print money.
That's incredible.
All right. Well, I think that's a good place to stop. Sorry. So on behalf of Twin Shores Financial, thank you all for tuning in, and thank you, Chris, for joining us on this podcast. If you enjoyed the podcast episode and you want to continue learning on how to become more financially free, please tune in next week for another episode. Don't forget to like, share, and follow us on all our social media platforms. And if you're listening to us on Spotify or Apple Podcasts, please don't forget to follow us as well. If you're watching us on YouTube, please subscribe. Does anyone have any last words?
Yeah, when the Money Game comes out, go watch it. We're looking forward to it. I can't wait.
Thanks, guys. You guys will love the film.
Yeah, thanks, Chris. Appreciate it.